Good morning, it's April 15th at 7:35 a.m. Central Time. This is Rich Ponson for the Critical Point podcast, and for this show we're going to talk about the corn market and specifically the July corn futures. And this is a daily chart, and let's talk about the buyer-seller interest that occurs during a month. It creates the largest trend swings during a month. It's how business is done. And you can see this on the commercial side, you can see it on the farmer side, you can see it in speculative and retail broker and even fund side. But what we're seeing here is these L3 trends are losing momentum. There's not much going on here. This is a dead in the water market. It's almost like falling asleep, but it's still bearish. So what we have is more important bottoms and tops that occurred here back in March. And we'll talk about that in a moment. And so inside of this, we have the L3 swings. And so we had buyer interest, seller interest, buyer interest, and it just stalled out, couldn't make up its mind, and eventually went into seller interest, and then was so weak it couldn't even pick its head up into a top there. So very little buyer interest at all. And now it's just eroding away. And what we think is that by tomorrow on into the end of this week, it's probably going to bottom for an L3, and you're going to get just another little bounce, may not even pick its head up into an L3, and then it's just going to decline again. But we also have to consider the possibility that this thing is losing downside momentum. It may just start to turn sideways now, okay? But there's no excitement here. The ethanol industry has been crushed, and they've shut down a lot. They have reduced a lot, and even if they're out there buying corn, they're being very nimble on how to do it. They're not going to pay top dollar, in our opinion. Over on the national market side, which national market really doesn't care as much about exports as everyone thinks. It doesn't really care about any specific industry as everyone thinks. It doesn't care about what's going on in the river. Okay, these are all just little factors that are put in. The reason is trying to come up with a national price. And there's so many other factors and such great diversification. And then there is the global macro influence, and right at the moment, the global economy and U.S. economy suck, okay? So there cannot be strong buyer interest. Any demand we have is just normal flow, pipeline flow. We just got to eat, but we don't have to pay you much for it, okay? And so not much going on here. And my thoughts are probably price is going to be sideways to lower for a few more weeks, but I'll flip to we'll zoom out, in other words, here and look at some of those bigger trends, because we do have an opportunity for an important bottom coming soon here that could establish a floor price, at least for a few months, okay? Now, let's take another look at the technical side. We can see this trend line coming through on L3 trend tops, and the market has somewhat respected it, but it's also falling asleep. Maybe it's not, and it's just coincidence. We can see the 5-day average tends to work, that they sell more than they buy near that 5-day average. And that is still resistance right at the moment at 334 and a quarter. Now we do have a tentative trend line drawn this morning here from these lows, not from an L3 bottom at the start, but it's using this low, which we don't think is an L3. And by the way, if we've made a mistake and the L3 did not occur on March 31st and occurred here, and I must say visually, that would be the better cyclical pattern, then it's going to take longer. It probably will not bottom this week. It's going to bottom next week. But for the moment, we're saying this is a bit of a flaky market here, a little fuzzy logic. Things are getting a bit sloppy, even though they're also getting boring and still bearish, okay? And we're saying this is the better L3 bottom. Therefore, we can get a blip up in the next few days. So anyways, if we run this tentative trend line, which is not entirely lined with these L3s, it's saying we probably got support today around 327 and a half, and of course it's trending lower over time, okay, getting down to say 326 or so by next week, a slow pace. Now we also have the stochastics that didn't make it to the mid-range for a secondary sale, but hey, it's turning bearish and it's even of widening spreads, suggesting chance for lingering momentum. It's probably a sale. Not much going on in volume and open interest, and we really don't see much going on in the fund world either. For the most part, this is a dead market. And it has a lot to do with the crude oil market being crushed over the Saudi Arabia, Russia, OPEC price war. And then, of course, poor demand. And back in 2015, more likely 2016, 2017, I was working at global headquarters of a major firm in ethanol, energy, petrochemicals, and basically told executives and some of the grain buyers and ethanol people, energy people, that we would have a recession coming. I was targeting 2018 to 2020, but I had to warn in 2016 it could be starting. And we did have a secondary recession in 2015, 2016. And I warned that we were going to have a slump in gasoline demand that could impact ethanol. And of course, I was also warning what was going on in the entire energy sector and petrochemical. And of course, everybody thought I was a little nuts at the time. Everything was looking good. And then, of course, once Trump was elected, they all became optimistic. And yet, really, the Trump years have not been good for the economy. There really is, it's just average performance here. Any president could have done this. So why didn't business get more excited? Why didn't the machine work better when you have such low interest rates, so much money, and you got a business tax cut? Well, I think it was the 9-year business cycle acting as a headwind, that it was picking up on some kind of psychology there where businesses didn't want to do much. And now, lo and behold, that little old forecast made years ago that we would probably see a 7 to 15% drop in gasoline demand. Well, it's not only true, but people are talking as much as a 30% hit in gasoline demand. I almost think they said that globally. Okay, so definitely serious headwinds coming in through on the ethanol side into the corn market. All right, I've talked enough about some of these fundamental factors here. Let's go zoom out to the larger trend and see what the model's up to. Okay, so this is a weekly chart, and I got a little bit of text here that was kind of used for a bit of advertising and explaining to people what I'm doing. But anyway, we can see that those L3 trends really create pops and drops within the larger trends of the year that actually have a better fundamental connection, but also there's still the X fundamental connection. X fundamentals meaning funds versus commercials, funds versus everyone, the cash market versus futures, but also market psychology, behavioral finance, behavioral economics. There's just anything and everything in that X fundamental world. And that probably explains half of price fluctuation, meaning fundamentals only explain half of price fluctuation. So make sure you get that through your head. That's why it's important to use fundamentals and technicals, because the technicals will at least fill in holes and gaps on the fundamental side. It's going to fill in holes and gaps on the X fundamental side, and it's also going to be it's going to be simpler on the X fundamental side than trying to get into the psychology and some of this very high level math and data mining. Okay, at any rate, what we have is demand, supply, supply, and then demand couldn't even pick up its head. And I think it's obvious it was the virus, okay? And the fears have crushed energy markets, crushed demand overall. And now we see more supply. Okay, now the reality is the supply may actually been in decline. The available supply may have tightened up because people are just refusing to sell it that fast. They want a better price. They're hopeful. They're betting they can get some kind of bounce, right? But the point is the demand has been crushed even more than, say, the supply, in the sense of supply panicking, selling lower. So you can drop prices even if supply says, well, I'm not going to sell you any. You can still drop prices. It only takes a few sellers at that point to lower the price. You lose the liquidity. Okay, so the point is that we're now in the time frame. In theory, the corn market could have started to bottom as soon as last week and can bottom this week. As we just showed you in L3s, it's really not looking that way, okay? We're not convinced. We think this is going to take a little bit longer, all right? And so what we're allowing is, however, any time now into, say, the end of the month, and maybe even the first week of May, that we're going to put in a level 1 bottom that's going to probably put an end to this entire sequence, even all the way back to here, this trend, or at least from back here on the failed attempt to be bullish off the March report. Okay, what would prove an L1 bottom occurring now? And the answer is probably to have a weekly close over last week's high at 340.5 for the July corn futures. And then it would be nice to see some technical indicators, weekly based, not just daily, that actually turn bullish, okay? And it would even be nice to see a little open interest rising soon after, suggesting net new demand. All right, so that's what I would currently watch for as a sign of, hey, be careful, you may be missing a bottom here. Otherwise, the trend's down, and we're even allowing as low as 318, even though this is showing we're at 330 and 3/4 this morning. And I don't know how confident we are that low. We're just saying it could go that low. Let's face it, this has been a long bear market. It's really a slow grinding market in a way. And the weekly stochastic is oversold yet again. It is bearish acting, but let's face this market could just turn sideways into a bottom. It doesn't have to just keep going lower. But for the moment, we have to simplify this and say the trend is down still. Now, here's what's a bit worrisome, and that is the trend is taking so long since the March high that it's taking away for the amount of time for the demand to overtake supply and bounce into an L2 top, okay, which is probably going to occur in early May. Now, the less amount of time per trend, then normally the less amount of upside potential. So that could mean we're in the doldrums for quite some time, perhaps into June, okay? Now, maybe we'll get lucky and this L2 top really isn't going to matter much. The market wants to follow a trend higher into summer, into July for level 1. And we don't doubt a level 1 top's probably coming in July. And there's a chance to get a bit of a weather scare, but keep in mind if our model forecast is 72% probability of a good crop this year after all, and then look at what USDA is showing for supply and demand balance sheet, and we could be swimming in corn. So the bottom line is our long-term forecast made a few weeks ago, and you can find it at the critical point podbean.com website. This right up here. I can't talk this morning. You will find an old forecast if you skim back through that of where we were saying we're probably going to see 330s and maybe 320s. Doubt we'll see below $3 in the futures. If so, that's actually going to be a new statistic relative to the major long-term cycles that we've followed in history, going all the way back 300 years in corn prices. So it would be something shocking to see futures trade below $3. But we just don't know how bad the economy is going to be this year, and we don't know how great that crop could be and what other complications and problems. But we also keep in mind that corn does not like to stay below $3.50 a bushel. And so we're also quite confident, even if it wants to go to 3, someday it's probably going above 350, okay? So we think there's going to be very little corn sold by harvest and later on into next year below 350, but that doesn't mean there won't be a fair amount of time in the futures of being sold below 350, okay? So at any rate, this is what we're looking at, that we think we're going to get a bounce, but it's a little bit discouraging that the time is now dwindling of how much rally we will get in May. The better rally may occur after a little June dip, meaning a few weeks from June into July, and then we're going to have to be concerned that, okay, this market's going sideways to lower in the harvest. So the bulls really only have one thing that can to bail them out here, and that is a crop problem. And our crop models are saying probably won't see a problem to 2021 to 2024. So this bearish stuff or neutral stuff can go on for quite a while yet. But maybe we'll be wrong, and we'll see that crop problem this year. At any rate, I hope there's been some assistance here. We're still bearish, but we think we're getting close to some kind of a major bottom here that might create a floor price, at least into June, and hopefully for the producer, a floor price all the way into next year, meaning prices move higher eventually and stay higher. As always, manage your risks relative to analysis of others. Thank you.